Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka, and the setup is not looking all that encouraging this morning. Remember, we started off on a very strong note yesterday, but post 1 p.m., a lot of volatility kicked in. In fact, we kind of fizzled out and, even ended below the 20 DMA level and 100 DMA level on the Nifty, below that 24,600 mark as well. So yes, all the gains that we saw at the start of the session completely fizzled out. But the good thing is that the broader end of the markets, held on to those gains, and the breadth was also fairly strong in favor of gainers. But first Tuesday weekly expiry for the Nifty, and perhaps because of that, some bit of volatility kicked in, and we saw all those gains fizzling out. But this morning, the GIFT Nifty is also hinting at a subdued start. It's in the red, marginally so, and in the pre-open as well. In fact, in the pre-open, we can see the Nifty showing good traction, 130 points up, at least in the pre-open session. Let's see if we manage to start on such a strong note or not. But of course, remember today we have the crucial GST meeting, council meeting kicking off. It's a two-day meeting. The centre's proposal of a two-tiered, tax rate structure will be taken up, and of course, a lot of clarity will emerge as to which item will go under which bracket. So, lots to watch out for on that front as well. Lots of stocks in focus. We'll take stock of them as well, and we'll take stock of your stock related queries. So keep them coming in. We'll get them addressed by our experts on the show. But before we move any further, quickly take a look at the top headlines of this hour. Wall Street kicks off September on a sharply lower note as investors weigh the future of President Donald Trump's tariffs after a federal appeals court rules most of his sweeping tariffs illegal. Trump decides to move Supreme Court, but also says that if there is an adverse decision by the Supreme Court, he may have to reverse those tariffs. So yes, because of that, we saw Wall Street, ending lower in trade. Asian markets mostly trade with cuts this morning, tracking Wall Street cues as investors assess the latest developments on trade. The GIFT Nifty, as I mentioned, is hinting at a muted open, but in the pre-open, the Nifty is looking pretty strong. Oil prices inch higher after the US imposed sanctions targeting Iran's oil revenue system. Gold prices, meanwhile, surged to an all time high amid lingering political and economic concerns. And the GST rate cuts on the cards as the Council's two-day meeting starts today. The centre remains confident of a smooth passage, even as states raise concerns over possible revenue losses. Well, India is in dialogue with the US for a bilateral trade agreement, says Commerce Minister Piyush Goyal. He also hopes things get back on track soon to conclude a deal by as early as November. All right, then taking a look at a recap of yesterday's trading action. Then, as I mentioned, Nifty headline indices gave up all of those morning gains. In fact, we did clock in that 24,700 mark, but gave up those levels. The mid cap index, however, we trimmed its gains, but ended the day in the green nevertheless. PSU stocks saw buying. Banking heavyweights continue to remain under pressure. You had all the stocks like ICICI, HDFC, Axis ending in the red. But Reliance managed to snap out of a two-day losing streak. In fact, that stock cut some losses on the index. Reliance Industries was up somewhere around 1% or thereabouts. Two-wheeler stocks continue to extend their gains, on the back of, perhaps hopes of a GST cut. So a hope rally really playing out when it comes to the two-wheeler names. Metal stocks were also higher, with the likes of Nalco rising somewhere around 5% or thereabouts. In terms of fund flows, the needle isn't moving when it comes to foreign inflows. Foreigners remain net sellers to the tune of 1,100 crore rupees in the cash market, but DI buying support continues. 2550 crore worth of stocks bought in the cash market. The Nifty put call ratio, in fact, slipped to 0.99 vis-a-vis 1.14 in the previous session. Also, watch out for a new listing today, Vikran Engineering, that will be making its stock market debut at 10 a.m. today. So that's how trade really shaped up yesterday. We'll talk about the GST Council meet that begins today. But let me bring on board our guest for today. Joining me is Vishnu Kant Upadhyay of Master Capital Services. Vishnu, lovely having you on the show. But looking at the setup, then we managed to kind of give up all of those gains. We did. Edge above that 100 DMA level, 20 DMA level as well. completely fizzled out. What is it looking like? All these up moves that we see kind of get sold into. The sell on rally trade. Do you think that will continue here on?
Uh, Good morning, Nandita, and thank you for having me on the show. Absolutely right. In yesterday's trading session, we have seen prices surrender every gain made in a first half of the day, and if you look at the chart, that prices fizzled out the rally from the proximity of 21-day exponential moving average, and considering the weak global cues, and apart from that, Gift Nifty is also trading with a loss of around 15 points. So we can expect, flattish to weak opening in today's trading session. But yesterday's low that aligns around 24,522 will act as a very good support area. If prices falls below that level, that will be a crucial for the market. In that case, we can see prices further decreasing towards 24,450. But if prices anyhow retains above that low, I mean 24,500, and this is very good zone of a put writers as well. So in that case, on the higher side, 24,700, 24, 750 will be on the card.
Hmm. Okay, that's the view then. Those are the levels to watch out for on the index. But what about the Nifty Bank Index? We've seen consistent underperformance coming in from there. Some semblance of green was visible on Monday, but yesterday as well, banking heavyweights were under pressure. Clearly, they were the top drag. Do you expect the setup to remain weak? Because whatever attempts we made at a rebound has been very feeble. Is the setup weak, and what are the levels that you'll be watching out for on the bank index?
So Bank Nifty is relatively looking more bearish than Nifty. And in yesterday's trading session, we have seen a very heavy selling pressure in Bank Nifty due to selling in index heavyweights like HDFC, ICICI Bank especially. So currently, looking at a graph of a Bank Nifty, it is trading very close to its a 200-day exponential moving average. But the way prices are behaving, there is a growing possibilities of taking down below that level. So I'm expecting if prices falls below 53,600, this is a round off figure, so we can expect further selling pressure towards 53,400 and 53,300. But anyhow, prices retains above that level, that's the possibilities are very low in fact. So in that case, basically we can see rebound close to 54,000.
Okay, okay, that's the point then. But the setup is looking, much more bearish, when you compare it to the index. What about the two-wheeler pack? Anything that's catching your fancy? Because there has been, a GST-led rally that has been playing out, right? Especially for EV two-wheeler makers like Ola and Ather, we've seen a very sharp uptick over the last month or so. So anything that's catching your fancy and looking particularly attractive on the charts?
So basically, Nandita, in auto space, I would prefer to go with the Bajaj Auto. You rightly mentioned that GST cut news, and this news is definitely inducing a bullish sentiment in every auto space, especially in two-wheeler segment. So if you look at a chart of a Bajaj Auto, it has given a neckline breakout from the inverse head and shoulder patterns, and apart from that, there is also a golden crossover between a 50 and 200 exponential moving average. So, this stock is currently buy the dip on a scenario like, and I'm expecting on the higher side 10,000, 10,500 will be on the card in a days to come. I mean, we can expect a rally of around 10 to 15% from the present juncture. While on the lower side, I would say 8,400 will act as a immediate support. Prices should not fall below that level to keep the buying tendency intact. So if someone is considering this stock to buy, 8,400 could be a immediate support, and he can use that level as a stop loss, while on the higher side 10,000, 10,050 will be on a card.
Okay, got your point. That's the view then. Buy on dips, that's the call, and that's on Bajaj Auto. Let's take stocks of some of those IT stocks as well. Last week we saw one of the days, the IT index talking a very strong up move. I think even yesterday, IT was in favor, but in fact, day before yesterday, IT was in favor. I think yesterday again it fizzled out. All these sporadic moves in IT, how are you viewing it? Because stocks have underperformed quite a lot, especially in the last 1 year if you compare it The Nifty IT index has underperformed by 15 to 20%. Chartically, is there any visible signs of an impending rebound, a high conviction rebound, so to say? Because stocks like TCS, Infosys, they have corrected quite a lot, even though mid caps have not done all that poorly. So anything that's looking much more attractive on the large cap front, and within the mid cap basket, Persistent, Coforge, all of these stocks, what would you do with them?
So Nandita, absolutely right, you said. Because IT pack entirely is a beaten down pack, in fact, right? So in this pack, there is a also increasing news that the in coming months, US Federal Reserve might cut the interest rate, and that will be a very positive news for an entire IT pack. So as considering this is a very beaten down and value buying pack currently from the present juncture, so I would prefer to go with the TCS, and because there is a news as well in TCS that this company got an order from some Europe. So I would say from a chartically this is rebounding from the vicinity of it's a multi-month low, although currently it is trading below it's a 21-day exponential moving average, but yes, the prices has started to form a higher lows kind of pattern. So I would say any fall in the stock close to 3080 or 3090 will provide you an opportunity to create a fresh long positions for the target of 3400 in days to come, and that is the vicinity of 200-day exponential moving average. So in IT, I would prefer to go with the TCS, but in a mid cap, I'm not looking any good counter currently.
Okay, TCS looking attractive from the IT pack. Of course, as you rightly mentioned, it has bagged a $644 million deal from Scandinavian insurer Trig. And the company has also rolled out a 4.5 to 7% salary hike for 80% staff after the recent layoffs that it announced. But still looking good, on the charts, TCS. But just about 2 minutes to go for the markets to open. Anything that you would like to recommend for our viewers this morning?
Any stock you meant?
Yes, that's correct.
Okay. Okay. So I think from the FMCG space, Dower will be on my radar because in yesterday's trading session we have seen a very good long build up in the counter, and apart from that, looking at a chart, so there has also been a golden crossover in the stock. Apart from that, the prices have closed above. It's a crucial horizontal resistance that was acting as a very good stiff resistance around 540 538. So yesterday's closing has been above that point. So I expect this bullishness is likely to remain unimpaired in the prices, and it is all set to move higher towards 590 580, and this is not a for an intraday, this is for a short term, while on the lower side 508 will be immediate stop loss. But if you are talking about any short-term pick, so I would prefer to go with the Havers. In yesterday's trading session, we have seen breakout from the falling trend line resistance, but the structure was not a very good of a candles because it formed a sort of a dozy kind of pattern. But yes, structure is looking a very good of chart. So in intraday, I would prefer to go with the Havers, but for a short term, Dabur will be our pick.
Okay, those are the recommendations coming in from Vishnu. Hold that thought. Just about 5 seconds to go for the markets to open. Looks like the first ticks will be in green. The Nifty just about 30 odd points up, 24,616. That's where the first tick came in, but it's just around the 24,600 mark as we speak. Sensex up almost 90 points. The mid cap index, trading in the green. Early days, but the bank nifty is mildly higher. Remember yesterday, banking names were among the top drags. Early days to comment on the advance decline ratio or the breadth of the market, but as of now, it's skewed in favor of gainers. 1,126 advances to 420 declines on the NSC. So, all in all, looks like an okay start in the face of weak global cues. But let's see which of the sectors are taking the lead. Yesterday, autos came under some bit of a selling pressure after the stellar run that they saw on Monday. Today, autos, building, in fact, have kind of managed to edge back into the green, 0.5% up, the auto index. IT is under pressure, marginally so. Metals showing good traction. Yesterday, remember, metals did well. And today as well, the metal index is up somewhere around 0.5% or thereabouts. Pharma has been under pressure, but today slim gains coming in on the pharma index as well. PSU stocks did well yesterday. PSU Bank index was among the gainers, and today as well, the PSU Bank index is up somewhere around 0.5% or thereabouts. Realty, taking a breather. Consumer durables also taking a breather. The oil and gas pack is up 0.5% or thereabouts, and as I mentioned, the Nifty Bank index as well, just about marginally in the green. In terms of the individual movers, then. M&M was the top Nifty laggard yesterday on some bit of news flow in terms of GST, but the stock is the top gainer today, 2% higher on this stock. Eternal, there's been a hike in platform fee by 20%, so that stock is also up somewhere around 1.5%. Tata Steel from the metal pack among the top gainers. IndusInd Bank is doing well. It has got a new auditor earlier this week. The stock in the green. Cipla from the pharma pack doing well. Hindalco, ONGC, Bharat Electronics, TCS as well on the back of that order win. That stock is up 0.5%. SBI, Wipro and ITC as well doing well. Of course, the GST meeting is kicking off. There'll be a lot of clarity emerging on cigarette taxation front as well. So ITC will be in focus. What's not doing well? Infosys is the top laggard on the index, followed by Bajaj Finance, ICICI Bank, under pressure. Shriram Finance, Ultratech Cement, Hero MotoCorp is also seeing some bit of selling pressure after the recent up move. Even names like HUL, Nestle, Tata Consumer are witnessing some kind of profit taking after yesterday's up move. Reliance, by the way, is back in the red. Uh, let's take a look at some of these stocks, Vishnu. The likes of Eternal, of course, all these new age stocks have picked up traction, right? And now, of course, with the recent news flow of the company hiking platform fee ahead of the festive season, Zomato, in fact, has hiked the platform fee. Uh, would you prefer a Zomato or, would you look at a Swiggy? Chartically, what do you like?
So Nandita, basically chartically, Eternal is looking quite good. It's a very strong uptrend. But in today's trading session, we are witnessing that prices just struggling to move above its near-term top. That was around 330, and the stock is currently trading at 326 to 25. So if I believe, the as I mentioned that the stock is in uptrend, so buy the decline will be our preferred strategy to be play with, and I believe any fall close to 317, 360, that is also the vicinity of it's a 21-day exponential moving average will provide you an opportunity to get a fresh long position in Eternal.
Hmm. Okay, buy on dip. That's the call on an internal. So yesterday, sugar stocks were quite upbeat. Yeah, some of them, saw double-digit gains, anywhere between 10 to 20%. How would you play that, up move? Anything that's looking nice, the likes of Balrampur, Shriram, Sri Renuka, I beg your pardon. How did you really play yesterday's up move? And any trades there?
Basically, yeah, definitely. In yesterday's trading session, we have seen a very sharp up move in entire solar space, and that was due to the ethanol production news. In fact, the rally in stocks was just due to news driven. So I have a very less conviction in that rally because such kind of rally fizzles out in days to come. So if you wants to go in a solar space, only one stock that is looking good and technically is in a bullish sentiments, that is a EID Perry. Although in recent days we have seen prices slipping below its a 200-day exponential moving average, but still prices are trading below its a very crucial horizontal support, that is a 1055. So I would say going with any Balrampur, Dwarkesh or Renuka Sugar that has given a very sharp rally in yesterday's trading session, I would prefer to go with the EID Perry. So buying is recommended in EID Perry, and just keep a stop loss below 1055, and we might see a level of around 1240 in days two.
Hmm. Okay, EID Parry, of course, looking good within the sugar pack. Of course, the move was news driven, and doesn't really seem like a high conviction move that we saw yesterday. But let's talk about Industar. This stock is down somewhere around 4% or thereabouts. It's in news because the board has approved the company's foray into African markets. You have some brokerage notes as well, where CLSA has retained the stock as high conviction outperform, but the target price has been cut to 520 rupees from 595 rupees. And they say that Nigeria, Uganda, and Zambia account for just about 500 towers. So that would the revenue diversification on that front is unlikely to be that significant, and the stock is also down somewhere around 4%. But Industar, looking at the monthly moves, even the last 3 month returns, 6 month returns, it has been in a consistent downtrend. And in fact, the stock came very close to its 52-week lows as well today. Do you expect this downtrend to continue, or do you think the stock is close to finding its floor?
Yeah, so we have to give some time to Indus Tower. Here it's a news-driven fall in the stock, and I would say on a monthly basis, the stock has given off decline of around a 6%, and currently it is trading 310, sorry, 310, sorry, 18, and 310 is a very stiff horizontal support. So that is why I'm saying we have to give some time to this counter. If prices recovers from that level, so technically, from the risk reward point of the view, there could be some buying in the counter. But yes, as you mentioned, the stock is in a bearish trend and continuously falling, making a lower top kind of pattern. So yes, fresh buying is not recommended in the stock. But yes, technically, we can consider if prices bounce from the present levels and closes the day with a gain, right? So currently, I do not have any opinion or suggestion in this stock. Just we have to wait and watch.
Okay, wait and watch. That's the call on an Indus Stars. But I want to get in your thoughts on a Mobikwik. Yesterday the stock was on fire. It came back above its IPO price as well. Uh, you know, Adia has fully exited its stake via block deal, and we also have a query on our feed. I spotted a query from Nana Prakasam, and he wants to know your thoughts on this particular stock with a 1 year time horizon. Or do you think yesterday's move was the one that gives you some kind of conviction of a sustained up move, or do you think it was just a 1 day wonder and that too news driven? And if somebody wants to invest with a 1 year time horizon, should they go ahead?
Yeah, definitely, definitely. Yesterday's move, brought some conviction to the prices, and I believe this rebound, has been triggered from the very multi-month low. So I believe there has been a very good amount of buying in the stock in yesterday's trading session. Prices are now looking to extend this rally towards 343. So if you have a time horizon of 1 year, definitely I will say that you can consider this stock. But on the lower side, to limit the downfall, just maintain a stop loss below 245.
Okay, that's the view then on one movie quick. But let's switch to some other query then. I spotted a query on ABB India. This one's coming in from Rupak Mehta, and he's I think making a loss of somewhere around 10% or so. Wants to know what he should be doing at the current juncture. Uh, should he stay put or should he look at booking some losses here?
Well, so prices are trading well above its support area that comes around 4900. So I would say as long as prices are trading above that level, and he can hold the position for the target of 5600, but maintain his stop loss below 4900.
Hmm. Okay, maintain a stop loss. That's the view. Rupak, I hope that answers your query. Just want to talk about some of these metal names. They are in traction today. Top three Nifty gainers are from the metal pack: Tata Steel, Hindalco, JSW Steel, and I think that's also because of China's move to cut production. That kind of is boding well, and will benefit Indian metal giants as well. How would you look at Tata Steel and Hindalco? Uh, anything that is catching your fancy between these two stocks, or would you prefer the likes of a JSW Steel?
Uh, well, so Hindalco is looking good on chart, and it has just crossed above its a crucial resistance area, and I'm expecting prices to eke out this rally towards 757. So I would prefer to buy this stock at a current market rate and place the stop loss below 730. Sadly, you mentioned about the GSW Steel. This counter is also looking good, and I believe the rally is likely to remain intact for the target of 1075. So yes, both counter GSW Steel and Hindalco, both counter is looking quite good.
Okay, I think we had a query on Hindalco from Komal Makecha. Komal, hope that answers your query. What's your view on depository stocks? We had NSDL listing recently. In fact, we had a query on NSDL from Vishal Dave. He said he didn't really manage to get allotment during the IPO. He wants to know whether he should buy NSDL or not. A lot of these capital market plays came under some bit of pressure of late. I think one day of rebound we saw earlier in the week, but we've seen a fair bit of pressure on the likes of CDSL and other capital market plays as well. But particularly about depositories, if how would you approach both these stocks now, NSGL and CDSL? Anything that one should look at?
So purely going by technicals, so if we look at a chart, although NSDL listing has been just a few days back, so there is no a proper chart on the screen. But yes, I would say prices are forming a sort of ascending triangle kind of pattern. It's a bullish pattern. So if he has a this share in his portfolio, definitely I would say to hold with a stop loss of below 1200, while on the higher side I am expecting the rally should remain intact for the level of 1400.
Okay, that's the view then. I hope that answers your query. There's a query on Tata Elxsi from NP Gandhi. Just want to get it addressed as well. The stock has seen some, in fact, quite a lot of pressure in the last month or so. Um, would you advise a look at this, or would you say look at some other names?
The stock has been a very language or lenient for last many times and continuously trading below a 21-day exponential moving average. So I'm currently I do not have a full conviction in the stock, but yes, I would say stock has corrected around 61% of its previous up leg. So yes, you should keep this stock on the market watch. And I believe any rise, above 5600 will definitely induce a buying sentiment, and that buying should be containing around 6100. But currently, I will not say to buy the stock as it is trading below its 21-day exponential moving average.
Okay, not a buy currently. That's the view on Tata Elxsi. Hope that answers your query. I want to take up this query on PB FinTech from Debu K. Uh, the stock has seen good traction, but of late, I think the up move or the rally has kind of, taken a pause. Uh, how would you look at these, insurers? Because, all these insurance companies will also be in focus, right? Uh, they may be exempted from GST. That's one of the things to watch out for. PB FinTech and some of the other names as well from the insurance basket. Would you look at them?
Basically, Nandita, entire new age and some insurance companies are doing quite well. And PB fintechs, chartical is also looking quite good. It is trading. It's in box currently, and just a few days back, it took a sharp rebound from the vicinity of a lower range value. So I would say prices are now all set to reach towards a higher range value that aligns around 1930. So for that target 1900, 1930, one can buy the stock at a current level, and a stop loss should be maintained below 1760.
Hmm. Okay, 1760. That's a stop loss on a PB FinTech. Spotted a query on Aster DM, which has had a stunning rally in the last 6 months. This one's coming in from Nitin Shahji. I think taking a kind of a pause today, and perhaps in the last 5 days as well, it has seen a 6% up move. Uh, should today's dip be looked at as a buying opportunity? Is this a buy on dip opportunity as to DM at all, or do you think it has run up quite a bit and the upside here on looks limited?
So basically, Aster DM from a healthcare space is looking quite good, and I'm definitely expecting some sort of buying in the stock. Buy that decline will remain intact, and I believe on the higher side prices are all set for 655.
Hmm. Okay, 655 on the upside. That's level to watch. A couple of more queries then. Any thoughts on the likes of CG Power? Sita Ramulu wants to know your thoughts. And of course, this company is leading from the front when it comes to, the government's semiconductor push, right? The stock has also been doing fairly well, CG Power. Any levels that one should watch out for here? Today is also, it's seen a 1% up move in the last five sessions, a 13% up move. Should one chase this momentum?
The rally in the stock has been news driven. Just a few days back, there has been a news breakout that related to the semiconductor business, and that is why the stock has given a rally of around 9 or 10% since that point. So I would say, but the stock has been a beaten down for last many days. So the rally is likely to remain intact, but as the stock has given an overextended gain in last few days, so buy the decline will be our preferred strategy. While on the lower side, any fall close to 718, 720 will be a right levels to accumulate this.
Hmm. All right, buy the dip. That should be the strategy on a CG Power. But there's one query on Tilaknagar Industries as well. This one's coming in from Gitu Sandesh. Wants to know if it's a good investment or I think perhaps there is some position the person has here. Wants to know whether I should quit the investment or or should I look at investing more? How would you approach? The stock has literally given 2x returns in the last 6 months.
Yes, definitely. It is currently trading, very close to its a good support area. And I would say from the risk reward point of the view, he should buy the stock or hold the stock with a stop loss below 460. While on the higher side, I'm expecting prices should reach towards 530, 540.
Okay, 530, 540. That's the kind of upside on the stock here on. There's one more query then on Alok Industries. That's one's coming in from Mukul Vaidya. Stock has seen some traction in the last 5 days. Do you see that as are you convinced with the kind of up move that it has seen in the last 5 days, or do you think it's, just like a, one-time move? How would you look at it?
So basically, I do not have any full conviction in the stock because it is currently trading below. It's a 200-day exponential moving average. I mean, a long-term moving average. So I would say, if you are very short-term, investors, I mean, if you are considering this stock for a 1 month, 2 month, so you can consider this stock, but buy the dip will be a preferred strategy. On the lower side, 17.70 could be a right level to accumulate the stock with keeping a stop loss below 16.70. While on the higher side, I believe 19.50 will be on card. But this is for a
Hmm.
short.
Okay, got your point. Last query then. Naveen has a query on ICICI Bank. We've already spoken about the Nifty Bank Index, but the weakness that we are seeing, in some of these banking heavyweights. Do you think it offers a good opportunity to average? Uh, how would you look at it?
Which stock? ICICI Bank?
ICICI Bank, that's correct.
So yes, stock is subsequently coming very close to its a 200-day exponential moving average, and I believe that level will be a very good opportunity to average or accumulate a fresh positions around, and that level is around 1370. So yes, let the prices come close to that level, and in that case you can buy the stock or average the stock.
Okay, that's the view on ICICI Bank, and that's all the time we have, for the query segment, and of course for the technicals as well. Vishnu would like to thank you for taking out time and joining in this morning. It was a pleasure chatting with you, and I think it was your first time interacting with us on Money Control. And I hope to see you again soon, sometime. Have a great day. All right, that was Vishnu Kant with his thoughts on stocks and with his recommendations and of course all your stock related queries as well. But quickly take a look at the markets. We are extremely flat. We've flattened out completely. The Nifty is just about 6 points up. The Sensex, in fact, as we speak, is slipping into the red as well. The mid cap index, although, is holding out, up somewhere around 0.3%. Bank Nifty as well, clutching on to those slim gains, and the breadth of the market remains firmly tilted in favor of gainers. In terms of the gainers, then you have metal names doing well today. The likes of Tata Steel, Hindalco, JSW Steel. These are the top Nifty gainers, followed by some banking and banking and auto names as well that are doing well. Tata Motors, M&M, these are some of the names that are doing well from the auto pack, from the banking lot. You have IndusInd Bank, Axis Bank doing well, and SBI as well from the PSU banking lot is in fact is doing well. Remember, the PSU banking index was up yesterday and today as well. The PSU banking index is showing strength, 0.6% kind of an up move. But before we bring on board our next guest, here's a message for our viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading, and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp to help you trade and invest with confidence. Now, Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today. All right, then, on that note, let me bring on board our next guest for today. Joining me is Puneet Sharma, CEO and Fund Manager at Whitespace Alpha. Puneet, lovely interacting with you. I think this is the first time I'm interacting with you on my show. So, welcome. I just want to understand, first of all, what kind of an impact are you expecting, from the GST meet outcome? Because, in the run up to this meeting, we've seen the Nifty and the market, in fact, stage a good comeback, come off most of the gloom that was, tariff related. So, how much of a demand kicker would GST really be? And do you expect, the GST reforms to usher in a golden era for consumption?
Well, good morning, Nandita, and thank you for having me on the show. On the GST front, I think this is a structural change which is happening in the industry, especially related to products, which a lot of the consumers in India will really be looking forward to purchasing in the coming season as well. Given that this is a season where a lot of the demand for these products, similar to something like a air conditioner or a water purifier, or even two-wheelers and some of the smaller potential cars that a lot of the people will be buying for the first time. So, in our opinion, I think the penetration of all of these products is going to go significantly higher than what we have been anticipating in the past as well. So, this is a structural change which is essentially happening in the industry right now, specific to the GST reforms that are expected to come out now. Uh, the impact in the very long term, although I do not really anticipate it to be that big of a bang, that the companies which are going to benefit from these changes will continue to show significantly higher improvement in profitability or in the revenue growth that they are going to anticipate out of this change.
Hmm. So, how would you play this theme? Would you look at consumer durables? Because, staples wise, even though the likes of HUL, Nestle, Colgate have seen a very good run up in anticipation of these cuts,
Yeah.
how do you really think this would play out for staples? The needle doesn't really move a lot, right, in terms of toothpaste and so, because, you don't really start brushing more than what you really do. So,
Yeah.
would it really move the needle for staples?
No, I think you're absolutely right. So this isn't really going to move the needle, though you're not going to consume more just because it is a slightly lower price point. So that's a very fair opinion that you would also have. But we may see a bit of an uptick in the near future because of this. So it could be a one-time impact that the GST has on the overall sales of staples, essentially, which is going to happen in the near future, let's say for a couple of quarters. That's what we are anticipating in this. Although I must point out that overall, I think the economy is going to be a lot more stable because of the changes that we are anticipating coming out of all of this GST reevaluations. And we have always been a proponent of a long-term view on the Indian equity markets, and that stands very solidly still. And with the changes in the GST regime, I think the story of the India's growth and the entire penetration of various products into the Indian population, I think that just is more solidly reinforced in this entire analysis that's happening.
Okay, but on the consumption side, the likes of PVR, do you think multiplexes stand to benefit, and even the QSR basket? Do you think
Yeah,
that end of consumption will see a fair bit of pickup, which is sustainable?
it's it's a weird place to be in right now for a people or anybody who's looking to invest into these sectors right now, because you do not know what will be the impact or how lengthen or how much of a time span it will be that these impacts will continue for companies like PBR Inox or in the QSR space as well. There will be for sure a couple of quarters that they will benefit out of this, but in terms of the long-term view, I would really not be too certain about what will be the impact of these. So it's more of a wait and see what happens in the long term, and does this demand uptick that's most likely going to happen because of the revision of the GST rates, will it sustain in the long term or not? That's to be
Sure.
seen.
Sure. And what about the dynamics for the auto space? Because four-wheeler wise, Maruti small car segment has been struggling quite a lot, and this would likely be a wish fulfillment for the likes of Maruti, right? Because of lower GST. And two-wheelers, on the other hand, have
Yep.
already seen a lot of other tailwinds also play out, right? Good
Right.
monsoons, more money in the hands of consumers as a result of
Absolutely.
cuts, income tax cuts, right? So how are you playing the auto theme, and how would you weave in GST into that?
So, well, auto is, I think, one sector that I'm really bullish on, looking at all of the changes which are happening in the regulations related to them. So, like you mentioned, the monsoon has been pretty good across, and that usually indicates a better demand for two-wheelers, especially from the rural sector as well. So, that's one place where I would anticipate a significant amount of increase in sales, especially in the current financial year. The second, with the reduction in the GST anticipated for small cars and for two-wheelers, as well as for a couple of other industries, I think auto sector essentially is going to benefit from the reduction in the GST rates, but it's still something that I would really anticipate right now, but not really take too much action on this, because we want to know exactly what the rates are going to be. Because there have been also news about a slab rate of 40% for luxury goods or cars priced higher above a certain price point, including electric vehicles, in fact. So that's something that I would wait and watch for, but especially for the small cars and the kind of cars that Maruti and the lower segment of the Hyundai portfolio, I think these are the vehicles that I would really anticipate should benefit from higher sales and better anticipation of revenue as well as profitability. Now, one more question is that will these companies be able to pass on the benefit of the GST to their
Hmm.
consumers, or will they be able to retain a certain amount of this for improving their own margins? Now, that's again something that I would want to see in the reports before we really take any action basis on this.
All right, point taken. So a lot is really riding on this, GST Council meet. A lot of clarity will emerge. Of course, the meeting kicks off today.
Yep.
But where do you really find alpha in this market now, Puneet? A lot of gloom was attributed to
Yep.
the worsening India-US relations. But Mr. Goyal came out and said that we could expect a deal by November. If that overhang gets out of the way, which are the pockets you would look at, and in the run up to that as well, till that happens, which are the pockets that you're looking at right now?
Uh, Personally, if you ask me, then I'm pretty bullish on the automotive sector and the FMCG sector. But overall, as a fund, our philosophy is a lot more long-term view on the Indian economy, and there we believe that it is a buy and hold kind of a situation that we are always willing to look into. So for us, it's a lot more about passively investing into the Indian equity markets and the sustained growth of the Indian economy during this entire turmoil as well, related to all the tariffs, which essentially the markets have kind of brushed off as one more event that needs to be just factored into the valuations right now.
Hmm.
It's just continued on its own trip of going above 25,000 as the Nifty levels. So in our view, if you buy and hold a portfolio of stocks that you have a conviction about, you potentially like a particular company and you understand its fundamentals, then it's nothing that you should be really worried about in the short term. And in the long term, we anticipate that the Indian economy will grow at a decent pace with the adjusted inflation as well. And you're looking at a real return of approximately 12 to 15% over the long course. So that's the kind of expectation that we would have from large cap companies as well, including all the companies which are going to benefit out of the GST changes. And some of the companies which are going to obviously face a bit of a uphill task in reallocating their global revenue from US to other territories in view of the tariffs which we currently face.
Hmm. All right. Of course, bullish on the long-term story, and of course, GST would of course benefit the companies. But let's talk about some of the other themes on the manufacturing side as well. Of course, we know that there has been a thaw in India-China relations. We saw that rare earth magnet issue that was plaguing some of these, EV makers that has,
Right.
that's out of the way now. Even EMS companies, stand to benefit because they source some of their raw materials from there, right? So, do you think these stocks have corrected enough and are worth a look now with a 1 to 2 year investment time horizon, or do you think there is some more correction that needs to happen given the kind of up move they've already seen in recent years?
I think it's a fair bet right now to really invest into the equity markets in general, even on specific companies which are going to get impacted positively or negatively by what's happening globally. I think it's still a decent price point for a lot of the companies that we are looking at. We don't usually have a specific viewpoint on any particular company, so won't be able to give you an exact answer about a particular
No,
company.
as a
Although,
sector, hmm,
yeah. So, yeah, as a sector, I think all of these changes which are happening in terms of global relationships with China, with US, with Russia, with everybody else related to these territories as well, I think we are still very confident that in the long term, these sectors will also deliver that kind of a performance that we are talking about, somewhere between the range of 12 to 15%. Uh,
hmm,
Timing the market in terms of entry point right now versus entering it in a couple of weeks later or a few months later, I think that's a point that it's very hard to really time the market perfectly like this. It may overall change your returns by a few percentage points, but it's more important to follow the conviction of what your philosophy of investment is and then take a bet on that sector or industry. Again, it
hmm,
begs to have a stop loss. It for sure also you can have a take profit level where you decide that this is the kind of target that I have for a particular company or a stock, and then you
hmm.
plan to exit out of that particular investment. But yeah, that's the way that we are also looking at it right now. Uh, Short-term movements in the stock prices will impact your overall return, but mark to market is not something that we are really too concerned about.
Hmm. Got your point. How are you looking at the BFSI space? Banks, of course, have been facing margin pressure as the 100 basis point rate cut, uh, kind of gets translated, right? But what
Yeah.
about NBFCs? Would you prefer them for the shorter term and for insurance as well as a whole? I wanted your thoughts. If GST goes, if this sector is exempted from GST, but they won't be really getting any input tax credit as well. So how does that really impact insurers? Your thoughts on the entire BFSI space right now? What should one look at?
Sure. So let's break it down into the parts. So banking, I think, is going to face a bit of a challenge in the recent few or the near few quarters, given pressures on their margins. Uh, But on the other hand, I think a lot of the NPAs and and all the accounting principles that the banks are following now, I think that's cleaned out a lot of the balance sheet issues that banks had faced for a very long time. Right now, I think we are still in a wait and watch on the banking side. As those are probably a few banks will do better than a couple of other banks, but in the long term, I think banking is currently facing a bit of a margin issue. That's what it is. On the NBFC side, actually, we are a little more bullish because all of the GST changes would also reflect in the financing of various purchases that we are anticipating that the people will be able to do. So with a higher penetration of two-wheelers or the first-time purchases of cars, they would be looking at financing as well. So there, I think we are a little more bullish upon a certain section of the NBFCs which are financing these purchases. And even smaller purchases, let's say for a refrigerator or an air conditioner, where GST impact will potentially increase the sales, they usually go through financiers. So that's where we are a little more inclined towards taking a long-term view. On the insurance side, I think with the reduction or the removal of the GST altogether, I think the penetration of insurance should increase further. That should make their own models a lot more stable as well in terms of determining the pricing as well. That in the long term should have a beneficial impact to the overall sector, but it will take time to really show up in the quarterly or the annual reports that they go to show. So I don't really anticipate too much of a benefit to the insurance business as such in the short term, because that's more of a change that will need to filter through various levels within their P&L as well, and finally reach the levels where we can determine the share price more.
Hmm. All right, that's the point. But what about emerging themes? India is taking giant strides in semiconductor innovation. There's a lot happening on the solar power front as well. Any of these the themes that one should keep an eye out on and add to portfolios as a long-term theme? Do you think these are some of the ones that look promising?
Slightly more difficult because there is no basis to really come up with a valuation for companies which are now getting into the fields of something like a semiconductor or development of the chip in within India. Uh, but yeah, I mean, people who are more familiar with these can definitely take a view on these. In terms of an overall impact on the economy of India, I think these are positive steps which are being taken within India right now. So that just reinforces our view of the Indian economy in the long term. But specifically on these sectors, I wouldn't really have a view too much.
What about defense and railways? The railways, saw a fair bit of correction after a stunning move, right, over the last few years.
Yeah.
Defense railways, do you see value there, or do you expect, or do you want some more correction before really looking at them in terms of value buys?
Uh, Defense is a sector which has seen a lot more volatility in the recent past. With obviously wars, the sector suddenly came into prominence, and then after that there was a dip. So there were specific events where you could have actually purchased a few of the different stocks and entered into for a medium to long term kind of a capital appreciation target. On the railways, I think I would wait and watch till there has been a lot of impact on railway stocks. There has been a lot of investment as well done in this sector, so there is definitely a lot of potential there. But I think I would wait and watch on this sector right now. Wait for a few more corrections to really say that there is a time to enter into these.
All right. Lastly, how do you really play some of these pharma names? Because pharma, as of now, has been spared from any tariffs. But within the sector per se, there are quite a few triggers. There's the GLP opportunity. Then there's the expiring of patent for Revlimid as well. That happens in January. So how would you really look at pharma as a pocket?
So some of the pharma stocks specifically are very impacted by the tariffs or any news filtering in from America. So those are the kind of stocks that, depending upon the news cycle, I think there will be opportunities to enter into those stocks. Overall, I think pharma sector and the production of drugs in India, I think that's still on a bit of an uphill. So again, not really too bullish on this entire sector because there's the amount of volatility that we end up seeing on these stocks is just far beyond what we would normally expect out of a passive portfolio. So, in our opinion, these are stocks that you can definitely look into, but not really specifically looking for a short term or a medium term kind of a gain.
Hmm. So, one pocket that you're really bullish on is autos. From a medium-term perspective, which are the two, three other sectors that you would recommend?
So other sectors that other than auto, Auto ancillaries, again, in the same basket as autos, in my opinion. So that's again something that you can look at. The others are FMCG, which I do anticipate to be an uptick in the overall sales and profitability there. Financiers, especially the kind of financiers who would be financing purchases of white goods, cars and two-wheelers. Other than that, and I think IT sector is one where in the short term, there will be volatility for sure, but there is still a significant amount of consistent performance that we anticipate out of the IT sector. So that's one where we would be bullish on as well. It also kind of ties in with the USD INR exchange rate, which obviously impacts their profitability as well quite significantly. Right now, the rupee has seen a bit of a change in its standard that was established kind of over the past few months. It's breached the 88 rupees per dollar mark, and with the depreciation of the rupee, I think IT sector is one which can also benefit out of all of this.
All right, those are the few sectors to watch out for: autos, FMCG, some of those consumer finance names, as well as IT. Look for value buys within these pockets. But with that, Puneet, would like to thank you for taking our time and joining in and sharing your thoughts. It was a pleasure, and I look forward to interacting again in the future as well.
Right. Thank you so much.
Thank you. On that note, please take a look at what the markets are doing. We're extremely flat. We're not really doing anything at this current juncture. Just about 4 odd points down on the Nifty. 24,573. We did reclaim that 24,600 mark briefly, but I think wait and watch mode. The markets are in wait and watch mode ahead of that crucial GST meeting that kicks off today. The mid cap index, however, is showing strength, just like yesterday. The Nifty Bank index as well, managing to clutch on to those gains. And advanced decline ratio, the market breadth is fairly strong, 3:1 on the NSC. In terms of a new listing, just about 3 minutes to go, we have a Vikran Engineering listing today. It was hinting at a premium, in the unlisted markets. So, hopefully it is going to be a decent listing. In terms of the GST meeting as well, the council will meet starting today. It's a 2-day meeting. And of course, they will be discussing the two slab structure for GST. That's 5% and 18% and 40% special rate for fin and demerit goods as well. Life and health insurance premiums are likely to be exempted from GST. So that's another thing to watch out for. What really gets cheaper would be the likes of soap, hair oil, toothpaste, namkeen, footwear, pencils. These are some of the products or items that we see, that may get cheaper. And what may move from 28% to 18% slab are the likes of TV, refrigerators, washing machines, so all those white goods, microwaves, and even small cars and motorcycles that are below the 350 cc. So yes, lots to watch out for from this 2-day meeting. But of course, with that, we've come to the end of this edition of Opening Bell. Thank you for staying with us. And of course, I'll see you at 3:30 p.m. again with closing bell. But before I go, here's a message for our viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading, and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to the Super Pro application today. All right, then. See you at 3:30 p.m. Have a great day until then, and hopefully we are looking at a positive close today because at the current juncture we are extremely flat. If we pick up or manage to pick up some momentum in the second half, nothing like it. But I'll see you at 3:30 p.m. Thank you for tuning in.